Hello everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of September the 25th, 2017. Now, to get started this week, we're going to begin with that all-important US dollar index that affects our Forex trading, our equity trading, commodity trading alike. So it's very, very important that we look to see what that dollar is doing. So we've had a big move up here. You can see on Wednesday on a very surprisingly hawkish Fed, but the market you can see is really not buying what they're trying to sell, as it's essentially failing below the VantagePoint 18-day predicted moving average, closing the week at 91.96. But more importantly here, guys, you can see that essentially on any rally on the dollar, as we compare that with the predicted RSI on a 60-40 split, something that I've been using here for probably the last 10 years to illustrate this point, using the VantagePoint predicted RSI with a 60-40 split, how powerful that can be when we can try and weed out false signals. So when we look at this, we have a new swing high that is formed here, and we've had a failure at the 60 level. Now, when we look for momentum in a trade, you can see on the break to the downside with the triple EMA cross, we had a very strong break of the 40 level. That move lasted for basically about well, actually, guys, it's still in play now, in my respectful opinion. We could be getting ready for a move higher on the dollar, but we have to understand what will trigger that move higher. First of all, we have to have a sustained break of 92.02. We need the predicted RSI breaking above 60, and we need the predicted short, medium, and long-term differences, and even the neural index pointing higher. That is not really happening here. So when I look at this, we're in a very tight wedge formation. The next move on the dollar will be either a break of 92.60 or a break of the 91 level. That is what we want to wait for here in this particular case. We have the German elections this weekend. I don't think there shouldn't be any real fireworks with that. Should be pretty straightforward. I'm not, but it's any election is a wild card, as we've seen in the past. But for now, guys, when you're trading Forex, you're either buying or selling US dollars. That's predominantly what Forex trading is. So when we look at that, the next bigger move, right now the dollar is stuck. It's still in a pretty substantial downtrend, and now it looks like we've paused. So we're waiting for the next big move to happen, and as long as you're looking at the levels that I discussed here, when the train leaves the station, guys, you're going to be on it. So how does that relate to Euro US? Well, as you can see, Euro US is following the dollar index. Dollar index down, Euro US up, and vice versa. So if you're a Euro US trader in the Forex market, of course, the Euro US pair is the most heavily traded Forex pair. When we look at this, again, I recommended this week buying the Euro. I still do for now, unless there's a surprise with this German election. But the key vantage point level, 119.70, and more importantly, this swing low down around 118.10. When you're buying, buy down to this level. Keep your stops below 118. We're in a very well-defined range here, guys, between 121 and 118, just round it out to 118 approximately. But what stands in the middle between that is this 119.17 area, the VantagePoint 18-day predicted moving average. So when we look at these indicators, we're not seeing a lot of upside or downside momentum on the euro, but still caught in a range. And again, I really don't believe the market is buying what the Fed is trying to sell us here. And we still have that line we've been hearing from the FOMC for years, which is it's data dependent. That is two words we don't like to hear. So basically, very little has changed. The Fed is slightly more hawkish. That's true, but that may not be enough to boost the dollar here. So the euro right now, most of the indicators remain still slightly biased to the upside. We're 51.8 on the predicted RSI, above the zero line on the predicted MACD. Our strength indicator is still above the zero line. Our neural index is still higher, but we need to get moving here, guys. The longer we stay stuck in this range, the more violent the breakout is going to be. So if you're trading the Euro US, keep a close eye on the US dollar index that I've talked about here. And the very bottom part of this range, we have buyers coming in down around 118.20, but we have sellers camped out at 121. US Swiss franc is basically getting dragged around by the intermarket correlation, which of course is the global indices. As long as the global indices are going higher, US Swiss franc is going higher, and it's kind of ignoring Euro US right now. So that's a very interesting move on this particular currency pair. But the fact is, if the equities break down and start moving lower, you can see that our medium-term predicted difference is crossing over our long-term predicted differences in the opposite direction in which way the market's moving. But the only thing is, we are seeing a bigger signal here as we're breaking above the zero line on the predicted MACD, but that hasn't led to a huge move here. It actually led to a failure where you can see the exact same signal here from VantagePoint, which again, it just ran out of steam. As soon as the equity markets fell, there was a problem with North Korea and the US. Next thing you know, US Swiss franc is going lower. So be very cautious with this pair, and if you're trading it, be very mindful of what even just the S&P 500. Keep an eye on that. If the S&P 500 is doing well, US Swiss franc is doing well. If the S&P is not doing well, US Swiss franc is going lower. Now, with the pound dollar, once again, I've been a strong advocate for buying the British pound over the last several months, despite the ups and downs of this pair. We've had a great signal here from VantagePoint. We are in overbought territory, but even after that very steep sell-off after the Fed, we didn't even get below the VantagePoint 8-day predicted moving average at 134.34. So basically, guys, I would be strong buyers down to the 132.89 area. And just remember, the Bank of England is equally as hawkish as the FOMC. So when you weigh the two together, the British pound still looks a little bit better here, in my respectful opinion. We just need a bit of a corrective move lower. So we can work that off a little bit and then come back in and start buying. So between 134.34 and 132.89, these key vantage point levels for next week, they're levels to watch for potential longs. Now, as we look at the dollar yen, this pair is probably one of the most frustrating pairs in the Forex. There's no doubt about that, as many traders will tell you. But as you can see, we're not making any new highs. We've failed up here, and the bulk of the dollar yen's gains came pre the FOMC statement, which of course you can't help but smell a bit of a rat here when you see things like this, that all of a sudden prior to the FOMC the dollar yen's making a big move. It certainly does look like somebody knew what the Fed was going to say, and then once the information has come out, dollar yen has done absolutely nothing since. So these are the things we want to look at. When I look at signals from VantagePoint, again, the medium term crossing over the long term predicted difference to the downside. We have what appears to be a newly formed trend line off of just under the 113, 112.50 area. So selling into the 112.50 area next week is a reasonable play, but again, this is a very strong equity trade. So if the equities are moving up aggressively, the dollar yen is usually going up too, and vice versa. So keep an eye again on that intermarket correlation, but you can already see the MACD, predicted MACD, starting to turn here, and we've seen the exact same signal off this 114 area. If we follow it down, that was a predicted MACD turning down, the predicted RSI in heavily overbought territory. It starts to turn down. This signal is almost identical to the signal that we got back in July. So keep an eye on those. Keep an eye on this very closely. But this trend line resistance, if it breaks, we could take a run up to 114, where of course we would be likely selling up into that area, because again, nothing has really changed. The global equity markets are grossly overbought and overvalued, in my respectful opinion. But that doesn't mean the buyers won't keep buying. But when we look at the strength of the trend here, using the VantagePoint proprietary indicators of the medium term and long term predicted differences, the long-term predicted difference is overbought, and the medium term, which is basically telling us the medium-term trend, is already turning to the downside. So selling dollar yen into rallies, probably at your better bet into next week based around what I've just stated. Now, with US CAD, you can see the US CAD is also forming into a very, very tight wedge here, with the lower trend line and the upper trend line basically converging in this area between 124 and 122.50. So a break of this wedge, You want to be a strong buyer or a strong seller. You want to sell low and buy high. This is a classic signal here, guys. The indicators from VantagePoint are incredibly mixed here, but there is a slight bias to the downside, once again, based around this failure to break above the 60 level in the predicted RSI. The predicted RSI is a leading indicator, guys. It gauges momentum in the market. It's telling us that we are running out of momentum around this 124 area. So small shorts can be attempted around 124, but that may lead to a much bigger short here. Our key vantage point level, though, 123.15. We're closing above it at 123.37. So keep a very close eye next week on your commodity prices, more specifically oil. If oil continues to push higher, the US CAD, that intermarket correlation, will be a leading indicator to tell us to sell. So we can identify these levels very clearly up just under this 124 area shorts. If we break through this wedge, we cut the short, very similar to a straddle here. We'll sell into that area, but then have buy limits ready to go around 124.20, 124.30, and that should lead to a move back up towards 126.30. But at this particular time, I think that's a little unlikely given the price of oil. Now, with Aussie US, very stubborn. This pair is holding on the long side, but just barely. We've closed the week at 79.56, just below that key vantage point 18-day predicted moving average, but this trend line here is holding. Our indicators from VantagePoint are very slowly starting to turn back to the upside. In my respectful opinion, the Aussie US has completed a long-term downtrend and is likely getting ready to move into a longer-term uptrend. Now, that's not going to happen overnight here, guys. That could take a couple of weeks, couple of months even, but I believe it's already starting. So when we look at these charts and we go back a year, you can see we've had a pretty heavy bottom, and we've been rising basically since last December. We've had a big move. So Aussie US bottomed out in mid-December 2016, and essentially we've just been moving up since. Now, when we look at this chart going back to 2011, Aussie US was in a substantial downtrend, but that's been about 6 years now. So when we look at it from that perspective, that tells me that the dollar is getting ready, the US dollar is getting ready to go into a longer-term down cycle. So when we look at New Zealand US, New Zealand has definitely been the stronger of the currencies between the Aussie, the New Zealand, and the CAD. The New Zealand's been very strong. Now, I have a couple of lines drawn in here. You can see we've had basically a triple top forming around this, right around this 73.50 area. We finally broke it on this one single bar, but we had absolutely zero follow through because of the Fed. But what we really want to look at here, guys, is the fact that we stalled right on the VantagePoint 18-day predicted moving average at 72.84, and we've closed the week at 73.27. So this still carries a strong bullish bias while above this lower trend line at 72.20. So buying down to 72.20 is reasonable because our predicted MACD is breaking above the zero line. We're 62.2 in the predicted RSI, so we've had our corrective move lower. Our VantagePoint 18-day predicted moving average is actually held for the last week and a half, which is again a further sign that this pair is turning very, very bullish. So there's a lot of noise in the market these days. We've got the German election, we've got the FOMC, we've got all of these different things that try and basically confuse the average trader. But if we look at our key levels and we understand what these key levels are, we have a very good chance of not only surviving the financial markets, but profiting.